Welcome back. This is Open Exchange and you're watching us live from the Motilal Oswal studio right here in Mumbai. We have our market pre-opening rates that are going to kick in just minutes from now. Rajesh Palvia of Axis Securities is joining in to help us with the day's trade. Lot of stocks in focus, so let's get down to it. Rajesh, good morning. On the overall market, what are you looking at in terms of, markers both as the floor and the ceiling for the market now? And what are the individual stocks you're tracking?
Good morning, Sonia. Yeah. So broadly, if we look at the Nifty setup, 17,500 to 18,000 is the possible range we can see in a couple of trading session. But if we break down it into the trading setup for today's session, 17,800 is the critical level for the Nifty on the higher side. If at all we crosses those levels, then some sort of short covering action we can expect in the market, and then Nifty can scale up further higher towards 17,850 to 17,900, which is the next major hurdle for the Nifty as of now, looking at the near-term setup. On the downside, 17,600 is likely to act as a good support area for any kind of volatility comes during the day also. To play this move, we are expecting that Nifty may attempt to give breakout above 17,800 because a lot of short covering action we have seen in the previous trading session. So to play this move, we are initiating here bull call spread. In this spread, we will buy 17,700 call option, which was closed at around 101 rupees. And we'll sell 17,850 call option, which was closed at around 36 rupees. So almost your outflow is 65 rupees to initiate this strategy, and you will start making profit above 17,765 level till 17,900 level. You can keep stop loss of 30 rupees for initiating this bull call spread. Looking at the overall setup on the stock specific, we believe that Zydus Life can continue its up move. We have seen a strong breakout on the weekly as well as on the daily time frame. Long built up was there in the system. So looking at the overall setup for Zydus Life, we believe that this stock can continue towards 510 to 520 on the higher side. One can buy with stop loss of 470. Another stock which we like, that is ABB. Long built up has been there. Stock managed to give breakout above its 20-50 day moving average, and stock managed to give breakout of its previous swing high also. So looking at the overall setup for ABB, we believe that this rally can continue towards 3,100 to 3,130. One can buy ABB with stop loss of 2,970.
Okay, Rajesh, appreciate your time and good speaking with you as always. Thanks very much. Now, Vivek, of course, has been tracking all the news flow around Adani stocks. It's also, of course, results season, so we're getting numbers. Transmission reported yesterday, ports is reported, green, of course, we highlighted. But let's talk about Adani Port specifically, because there is management commentary and there is an upgrade from CLSA as well. Vivek, take it away.
Well, absolutely right. So yesterday during market hours, the results came. Yesterday evening around 7:30 p.m., the management held a conference call with analysts, and we've highlighted some of the key points to keep track of. Number one, they maintained their FY23 revenue as well as EBITDA guidance. So revenue guidance of close to 19,200 to 19,800 crore is something that they reiterated. EBITDA is expected to be in the range of 12,200 to 12,600 crore. Also, in terms of volume boost, remember the implied ask rate for Q4 as far as the management's own guidance is concerned is quite steep. So what the management has said is that they are expecting a boost to mid-term volumes from the Gangavaram port, the Dhamra terminal, as well as the Krishnapatnam port. Now, also the company for the first time has introduced the EBITDA guidance for FY24, and quite a steep guidance that the company has given. 14,500 to 15,000 crore is what they are anticipating FY24 EBITDA. Also, they're going to aggressively prepay loans, loan prepayments of close to 5,000 crores. So net debt to EBITDA, which at the end of FY23 they anticipated to be 3.5 times, they expect it to go lower to 2.5 times by the end of FY24. And lastly, as you mentioned, CLSA has upgraded the stock. They believe that the key takeaway from the third quarter call was while they've kept FY23 guidance intact, they recalibrated their lofty FY22 to FY25 capex plans and is now resolutely focused on bringing down its net debt to EBITDA level.
Okay, thanks a lot for that. In fact, in pre-opening, Adani Ports is the biggest gainer right now, so up almost 7.5%. They've maintained their guidance and there is an upgrade that has come through, so the street likes that. Let's see how it plays out. Devin Choksi is still sitting by with us. Devin, quick thoughts here. At 600 rupees on Adani Ports, how does the risk-reward look for long-term investors?
Sonia, definitely, I think this is one company where I'm extremely convinced and bullish about. Already 500 million metric tons of port capacity in India they have got. Plus, I think overseas ports that they have acquired is adding further to the capacity. In my viewpoint, I think larger the volume that you handle, you are basically, I think, bringing up volume-based growth into this business. And the higher the EBITDA margin that you command on this particular businesses, I would think that I think this company would be a steady revenue generator, steady EBITDA provider. At the same time, I think the growth would be, I think, still reasonably good to steady from going from coming period because of the higher volume capacity that they have. So if they manage their debt well, which they are committing, I believe that I think this company remains absolutely convincing from investment point of view.
Okay, all right. Devin, thanks a lot for joining in. I just want to get a quick thoughts in on a couple of more stocks and point them out for you. Hero MotoCorp in pre-opening is settling a bit lower actually on the back of that, slightly disappointing set of numbers that have come through. Some news flow on TCS as well, keep that on your radar. You have Bharti Airtel. In pre-opening, Bharti is a tad bit higher actually, so not too bad despite the numbers that have come through. But Prince Pipes posted weak set of Q3 earnings. The revenue growth is subdued at just around 6%. It's the margin compression that has disappointed the street, down to around 10% from nearly 17% we saw last year. The positive, however, is that after a steep 8-month-long correction, PVC pipes prices have recovered by 13 rupees per kg in December. Nihar Chheda, the Associate Vice President, Corporate Strategy at Prince Pipes and Fittings, joins us now. Nihar, thanks a lot for joining in. First, on the margin picture, it's a steep compression that we've seen over the last many quarters. Do you think it could get to single digits before recovering, or do you think the worst is over now in terms of the margin weakness?
Sure. So firstly, thank you for having me, Sonia. I think
Sure.
performance in the December quarter for us was actually heartening to see. And the reason for that is, as you're aware, the PVC prices have seen a steep decline. And the worst is behind us. The September quarter was the worst, where we actually saw a negative operating margin. And PVC prices continued to slide in October and November and only stabilized in December. Despite which quarter on quarter, we were able to increase the operating margin by more than 1,000 basis points, while still also increasing volume growth by 35% year on year for the December quarter and a 20% growth for the 9-month period. So we have been able to not only improve margins sequentially, but also gain market share on robust volume growth. And lastly, we have also been able to focus on cash flow with a tight working capital, and as a result of which today, balance sheet is extremely strong, and we are net cash by more than 150 crores today.
All right, let's take that part by part, Neeraj. This is Nigel on this side. Well, as you said, PVC prices, they've stabilized, and in fact, now you're pushed through a price increase, which is good news. The question to you is, the last quarter, quarter 3, volumes are very, very strong. So has this price increase dented demand? If you would give us a sense, what could the volume trajectory be for quarter 4 as well as for FY24? What kind of a volume growth can you guide?
You see my product portfolio today, around 65% of our product portfolio is building material, which is plumbing and drainage pipes. And the end user for that is the real estate sector, which is doing extremely well. And whatever interactions we've had with builders across India, I think there's a very positive sentiment and a sustainable demand can be seen for the next 1 or 2 years at least. And the balance 30% of my portfolio is agriculture pipes, where as a result of affordability coming in the commodity, the PVC prices decreasing significantly. I think we should do well across both sectors over this quarter and the next financial year as well.
Can you quantify it? What kind of a volume growth should we look at, say, for quarter 4? Can the volumes be as good as what it was in quarter 3? Give us a rough number. And since things are looking up, both on the real estate side as well as on the agricultural side, what kind of a volume growth would you guide for FY24, Neeraj?
So I think it's early days today, so I'll stay away from a quantitative guidance, but I'm optimistic on what going forward.
Double digit, basically, Nihar, is it?
Yeah, I think it's definitely possible with the kind of tailwinds that are there for the industry. So yeah, it is possible.
Okay, it is possible. Now, what were inventory days for the quarter Nehar? Because I think they had shot up to some 85 in the second quarter. Have they come off? You'd indicated they would come off, and has that stabilized that issue?
Correct. So inventory days have significantly reduced. They're back to our normal of around 60 days. And along with that, the debtor days also have significantly reduced to to around 48 days, which is why we are having a very strong cash position as of today.
Okay. Finally, what is the market share that you're sitting on right now? Has it changed compared to what it was, say, about 12 months ago?
Yeah, I think not only 12 months ago, but in the past couple of years, I think the Indian piping industry has seen a significant consolidation from the unorganized to the organized. Even within the organized, the top 3 or 4 players like us are, outpacing the growth of the market. And today we would be at around 7% market share.
And a year ago, it would have been around?
Around 5.5–6%.
5.5–6, so 150 basis points. Just a quick question on the working capital days. They have improved, but what is the steady state we should work with?
I think we're close to steady state. So I think today we're at around 44 days of working
44.
capital.
So you expect to hold on to that. And EBITDA per kg, could you give us a rough number out there? Worst of margins are behind you. What is the EBITDA per kg you're doing, and a sustainable number going ahead since the worst of margins are behind?
So I think we look at EBITDA in a percentage form, and what we're guiding is 12 to 14% EBITDA margin over a long term is sustainable.
All right, Nehar, we'll leave it there. Thank you very much for your time. Appreciate you joining in with that perspective. Guys, by the way, yesterday there was a bit of a flutter of excitement with, they were talking about Paytm because it was up. There was Zomato, which joined. There was a tweet from Dipinder Goyal, the founder of Zomato, and we put this up. The stock, by the way, spiked 5% after that tweet. And we should probably be able to pull that up. He essentially, of course, congratulated Vijay Shekhar Sharma on the EBITDA profitability. And he said, well, sorry, a bit late to the party because we were focused on our own profitability. So that got, I think, the street a little bit excited. I think there is a note from JP Morgan. I'm not sure which sell-side broker, but there's a note on, not this comment, but on Zomato and their focus on profitability, etc. as well. We'll try and have that up for you as well. But it's what, 9:10. The pre-open is done, and is that the pre-open? Yeah, I think that is the pre-open rate, right? 4–5% higher on Paytm, 30 points on the Nifty is what we have. Sudarshan is with us, and Mitesh is with us for their 9:10 call. Sudarshan, what do you have?
Coromandel would be a buy with a stop under 880.
And Mitesh? What about you, Mitesh? Okay, I think we don't have Mitesh with us. So let's get a couple of more stocks on board. Paytm, of course, is the big mover right now, up almost 5% Wonderla Holidays is the other one that has had a very good performance in this quarter, and the stock in pre-opening is now up almost about 6–7%. But let's find out the standout brokerage report of the day. Nimesh is here with us. Nimesh, what do you have?
Hi, Sonia. So today's standout is on Coforge. Nomura has initiated coverage on the stock with a buy rating and a target price of 5050, a potential 17–18% upside from current levels. Now, they believe that the management change brings in vigor and focus on execution. In fact, the investment in technology will help improve the competitive intensity for Coforge going forward. They expect a 180 basis point margin expansion over FY23 and FY25, and during the same period, they expect 25% earnings CAGR for Coforge. In fact, the key risks, however, are like a slow execution, expected growth to slow down, a bit of impact on margins, but the biggest risk to the stock would be an overhang of bearing selling further stake in the company. But on terms of earnings and in terms of execution, they believe the risk reward is favorable, and hence initiating coverage with a buy rating and a target price of 5050 on Coforge.
All right. Nimesh, thanks very much for that. Paytm, of course, we mentioned the double upgrade from Macquarie, but let's go into the detail of what Suresh at Macquarie is saying. Abhishek is starting by with that. Abhishek.
Well, to begin with, Macquarie has double upgraded the stock to outperform from underperform that they had earlier. The target price has been increased to 800 per share from 450 that they had earlier. So almost a 75–80% increase in the target price. They say that the FY23 to 25, the loss per share estimated is now lowered by 18 to 72%. So business, biggest surprise is that the distribution business, control of cashbacks and OPEX, these three segments have actually surprised them. them positively. So price matters, which means that the valuation matters in conjunction with the fundamentals. Paytm has positively surprised on the distribution of financial services revenues by a wide margin. So they see a very visible approach, a visible change in approach of management to deliver profits. So they have raised their FY23 to 25 revenue estimate anywhere between 33% to 51%. Back to you.
All right, thanks a lot for that. Well, TCS is the other stock that will be in focus this morning after the Phoenix Group has expanded its strategic partnership with TCS. This is the largest UK deal for TCS in the last 3 years, and this is a business transformation deal which includes administrative services valued at over £600 million. So positive news flow coming in for TCS as well. A lot of good results coming through this morning, so we'll keep tracking them very closely. The pre-opening rates are settling, I think, in about 10-15 seconds now. You'll have the market opening for you. Good numbers from the likes of Thermax, Wonderla, Navin Fluorine, and then of course Paytm will continue to be in focus. Bharti Airtel, Hero MotoCorp, all will be reacting to their numbers. By the way, those are Navin Fluorine's very good set of numbers coming through. Revenue growth of 50%, gross margins up 70 basis points. Even Thermax has been doing pretty well as far as the stock is concerned. Revenue growth of almost 30%, EBITDA up 42%. So a lot of good numbers as well. The pre-opening rates now settling with a gain of almost about 30 odd points. Overall, of course, for the market, it has been very, very range bound. And now we're moved, 17,800 has become a bit of a resistance for the market. Let's see what happens in terms of the RBI policy as well. Is the RBI governor stone dovish? Will he talk about the end of the rate tightening cycle? All of that will be closely watched. Here is the first take on the index. The Nifty is up about 35 odd points, so marginally positive opening. The sensex is up about 90 points as well. So we go with green as we head into the RBI policy. Adani Ports and Adani Enterprises are the top gainers right now, about 4 to 6% higher, followed by Infosys, which is up about 1 odd percent. In fact, Adani Ports post the CLSA upgrade and the positive commentary from the conference call is your big gainer this morning. Apart from that, you have some of the cement names. Nigel was referring to it earlier. Ultratech Cement is up almost about 0.6%. There is a bit of a bounce back in metals. So Hindalco, JSW Steel are in the green right now. And a couple of these pharma names like Dr. Reddy's as well holding up with some gains. So what's on the downside? Bharti Airtel and Hero MotoCorp. As we were mentioning earlier, on Bharti, of course, there's that loss that hit the bottom line. And on Hero MotoCorp, there is weakness in their numbers, so down about 1.5% over there. In fact, consumption as a piece is under pressure. HUL, Nestle, Britannia are all under pressure now, down about, Asian Paints as well, down about 0.5 to 1 odd percent. And from the losers, it's Power Grid that's down almost 2.5 odd percent. So the market opening has been kind of lackluster, you'd have to say. Very, very flat, consolidating with a bit of a positive bias. Adani Group stocks on the upside coming in for a bit of a pullback. You have some of the metal stocks that are pulling back a tad bit, but plenty in the broader market. So let's take a quick check on what's happening there. Paytm is really the stock of the moment, and Zomato giving it company. So I guess all these new age tech stocks gunning for profitability, and the market is appreciating that. So Paytm now up almost 9%. Lots happening. Well,
lots happening. Sony, on the headline index itself, on the Nifty, that is, we're up close to around 30 points. Power Grid, that's down close to around 2.5%. On Coal India, it appears the stock is down 2%, but adjusted for dividend, in fact, it's up close to around 0.5% odd. So keep in mind that Coal India has gone actually ex-dividend. Cement stocks, well, they are, seeing a bit of a up move on the back of a possible cut in GST. The finance minister said she'll be taking up with the panel, then the panel will come back with their recommendations. It could be a long drawn process, but the intent seems to be positive. That's why you have Dalmia Bharat, that was up. It didn't react to positive set of numbers a couple of days back. That's opened higher. Ambuja Cements is higher. India Cements as well as higher. Keep in mind that this GST cut, well, in all probability, the cut will have to be passed on. So prices as well will come down. Besides that, you have Concor. That's down close to around 2.5-3% odd. Nomura, they have come out with a note and they've downgraded the stock. So I think that's playing out on that one. It's down close to around 2.5%. Gland Pharma as well is down close to around 2% odd in today's trading session. And a couple of other names. Let's see RCF. Well, whether it's reacting to a good set of numbers. The EBITDA number was up at close to around 90% odd. The margins as well did improve. So let's get RCF up for you on the screen. And IRB Infra, we have the January toll collections that look pretty good. RCF is up close to around 4% odd. A couple of other names that deserve mention. Eveready Industries, we're still waiting by for the turnaround, but the numbers look quite disappointing. The margins did compress a little bit. Hope is that the new promoter coming into play, maybe in fact we'll see a bit of a bounce back. For the time being, it's not yet evident. Stock down close to around 2%. But Nifty is building onto the gains. Prashant, almost at that resistance zone of close to around 17,800 odd.
All right, no, absolutely. I mean, so 70 points, 17,800 is odd is where we are at. You guys were talking about Paytm, but look at Zomato, right? Zomato is up another 5.5 odd percent. So basically, from yesterday's from the pre-tweet level of the founder talking about the focus on profitability, it's up 10%. So this is quite interesting. And we'll pull more on Zomato in a bit, get you more details, etc. Just an update in terms of what their stated objective in terms of by when they want to get to profitability, etc. is. All right. Other than that, Adani Ports is up another 5.5 odd percent, as I think you guys have been saying. Adani Wilmar is up about 5%. Ambuja Cement is up 3%. It's basically Adani Enterprises, of course, is up 5.5. These, by the way, are also the top volume traded gainers. So, when stocks go up and they are backed by volumes, or they go down and backed by volumes, I mean, always important to take note of that as compared to, stuff moving around with thin volumes. These are the names that I mentioned, the names which are moving up with decent sized volumes for this point in the day. Zomato is zooming, actually. It's up 7% now. So just to go back to the other one, which is doing very well. Paytm is up 7%, so that's doing very well, 630. Paytm, though, was up 10% yesterday. It lost about 5 by close. So, things did come off a little bit. Adani Green and Adani Power are the other names which are coming up in the mix in terms of stuff which is doing the best. SBI Life is up 1.75% amongst the life insurance stocks. I mean, I think SBI Life is the most liked amongst analysts, etc. I think you guys mentioned Vandala, which is up 12%, 419. It's coming up with volumes, and that's the only reason I'm mentioning it. There is Adani Transmission, which is up about 3.5 odd percent as well. I don't see Adani Total Gas. Maybe that is the only one which perhaps is down, but otherwise it's more up than down for that group this morning, and that was the case yesterday as well. Adani Total Gas is still lower in trade. On the downside, apart from what we've already mentioned, maybe you could look at Astral. We, of course, reacting to earnings. We put details up earlier, 2.25% lower. Gland Pharma continues to sell off. It's down 2.5, 12.74 on Gland Pharma. Indus Tower, of course, had a big day on the back of that Vodafone news a day ago. That is seeing some pullback, some profit taking as well. So 70 points and 17,792. The 20-day moving average for the Nifty comes in closer to 17,900, and I think that's the first stop the market needs to climb over, close above for the market to look ahead. Mahesh Patil is CIO at Aditya Birla Sun Life AMC. He's joining us now to take some questions. He's a market master of the day. Mahesh, great to have you with us here. Thank you very much. I want to start with earnings, Mahesh. How are you and your team looking at the earnings we have been getting in the third quarter so far? What I've noticed is there are no upgrades, any large upgrades. Earnings either are pat for FY24 and beyond, or there are cuts, and in some cases meaningful cuts. What are you guys looking at there?
Yeah, you're right. I think this quarter we have seen that the overall earnings have been kind of mixed. We have seen IT companies actually compared to expectations, they have actually done better in terms of margins. In fact, in one or two IT companies, we have seen some upgrades. But by and large, if you look at the Nifty earnings numbers which have come in till now, it's still a reasonable growth. We have seen a growth of almost 16-17%, which is not bad considering the fact that overall there has been slowdown in terms of exports, and domestically also there has been kind of a slowdown on the discretionary side. Consumer durables and other sectors have seen a marked slowdown after the festive season, and overall rural economy, which was supposed to pick up, is still gradually moving up. So on this backdrop, I would say that the growth numbers for the Nifty earnings is still fairly good. Good thing is that we haven't seen much on aggregate basis any downgrades. There are a few sectors where the downgrades have come in, stock specific, but by and large, we don't see any material risk to earnings for FY24, and that looks to be a fairly good outcome in a scenario where globally we have seen quite a few downgrades for this calendar year.
Okay, by the way, all of these startups and these new age tech companies, first it was of course Paytm, then it's Zomato. Now Nykaa is also added to that list. It's up and about. PB Fintech is also moving up with, up about almost about 3% odd. Mahesh, good morning. That's the theme, right, in the last few days, that perhaps these new age tech companies are all getting to profitability. And we've seen Paytm display that. Would you want to raise your allocation to any of these names that I mentioned?
So I think the new age tech companies have, you rightly said, they're focusing more on profitability. Earlier, it was more of growth. And consider the fact that markets, we've seen a good correction in some of these stocks here as well as globally. And focus is now back to profitability. And we've seen some of these companies cut down on their costs and to some extent sacrificing growth. Though I think in these companies, if the growth comes down materially, then the attractiveness of these companies goes down, because investors looking at these companies are looking for the kind of high growth which they are reporting. But I think globally also we have seen in NASDAQ, a lot of the tech names have bounced back from the low. So the sentiment which had, the correction which had happened in these stocks on the back of sharp correction in these new age technology stocks globally, that has to some extent arrested. And we are evaluating some of these names. We've initially after the IPO and the post-correction, we looked at some of these names and tried to really value them more now on profitability rather than the revenue multiple or the overall subscription base. So I think with profitability inside, it's now much easier to value them, say probably 3-4 years down the line on EBITDA multiple, and then look at a fair value. So yeah, I think some of these names which are now road to profitability and cash flows are generating free cash flows. Those companies clearly are on our radar, and we would evaluating them obviously now with a proper framework of valuation. And if it fits that, I think they can still be good compounders over a long term.
There are just few of them that are listed. Mahesh, do you want to name any of them?
I don't want to name any of these names, but I think clearly the factors what we're looking at in these companies is companies which have already established leadership. They have the competitive intensity in this space has pretty much been set. We're not seeing any new entrants coming in and trying to really get into a pricing war. And so these are the factors which, and we see still a large addressable market, okay, which will ensure that they will continue to grow at a fairly good rate over the next 10 to 15 years.
Okay, all right. Mahesh, I also want to ask you about the Adani Group. The last 10 days or so, they've been in news, and it's had an impact not just on the group, but on the markets as well. So two-part question. Some of the stocks have fallen considerably, whether it's in Ambuja Cements, in ACC, or even Adani Ports, which had good core business. But because suddenly a question mark came on the group, that's why the stocks corrected. Are some of them looking attractive? And the second factor is, can it have a larger impact on the markets on the whole, or has that mostly played out?
So I would not like to comment on individual Adani stocks. That would not be right. But I think overall, the correction post-budget we saw was largely due to the factor of Adani Group companies, where we saw significant price reaction over there and concerns about the overall debt repayments of the group. But I think if you look at looking at the numbers and the overall exposure which the banking system has to the group, I think it is something which is well within the limits. We don't see any major systemic problem. Also, the banks and others which are currently in this shape where the balance sheets are very strong. We are not seeing otherwise any large corporate stress. We are going through a very benign corporate credit cycle. And I think that should be able to contain any kind of contagion effect, okay, which possibly market was fearing. And we're seeing some of these companies also now trying to reduce their pledges. They have some amount of liquidity which they have used to repay some of the loans and reduce the pledges. So I think in that context, the whole concern, okay, which came in and we saw, I think to that extent, I think it is looking to be getting arrested. And I don't see that really having a larger implication on the market and the banking system in particular, because that was a sector which really took the brunt of this issue.
All right. Well, Mahesh, we leave it at that. Thanks a lot for joining in and have a great day. The market, it looks like it's having a good day so far. So the start has been well in the green. The Nifty is now very close to that 20-day moving average. So don't lose sight of that. 17,807 is what the Nifty has hit right now, which is up almost 85 odd points. And the 20-day moving average is somewhere to the tune of around 17,874. So good day so far. But TCS is really the stock of the moment. There's a big order win there. Reema's here to give us the fine print. Reema, over to you.
A large deal. It's won a large deal from Phoenix, which is an insurance company in UK. Now, Phoenix is an old client of TCS, but now they've signed a fresh deal, which is valued at £600 million. The tenure of the deal is yet to be decided. So what is TCS going to be doing for Phoenix now? Well, Phoenix has gone ahead and acquired a company called Reassure. So TCS will help in the M&A and the integration of that. They also want to transition the platform on which Phoenix was operating on to the new platform that TCS offers. Now, TCS is a product called Banks, which it gives to insurance companies and banking, financial, BFSI clients. So they will be transitioning, Phoenix old platform to Banks, and they will also help reimagine the customer experience for all of Phoenix's 3 million customers. So that's the scope of the work. Now, typically, TCS classifies or buckets its deals into cost and optimization and into growth and transformation. Growth and transformation is helping companies reimagine the future and try and get them up to speed with the latest on the transformation efforts. Now, as I said, Phoenix is an old client, more than 10 years plus, but historically, TCS would be doing a little bit of an outsourcing work for them. They would help with their cloud work. But now this, according to TCS, they're being classified this as a growth and transformation deal. The key positive is that this is a large deal, £600 million. What we understand is that this is the largest deal signed by TCS in this fiscal year, FY23, and one of the largest deals from the UK geography, perhaps in the last 3 years. Remember, large deals had dried up for the industry and even for TCS in particular. And the fact that companies in this macro uncertainty are going ahead and signing large deals is a positive. So TCS has got a fresh deal from an existing client, and it's a large deal. It will bolster their UK revenues and their BFSI revenues in the coming few days. Back to you.
Reema, we don't know, this is spread over what years, right? Because, I mean, when analysts pencil this order in, at this stage, we don't know. This is over how many years?
As I said, the tenure of the deal is not yet very clear right now.
All right, Reema, thanks very much for that. Appreciate you joining in with that perspective. I think we have the management of Deepak Fertilizers joining in. They reported a good set of earnings in both the chemicals and the fertilizer segment. Profit has jumped 40% this quarter for the company. On the margin front, while there is a contraction in third quarter owing to higher expenses, the 9-month figure is still up 500 basis points. We have Amita Bhargava, Chief Financial Officer of Deepak Fertilizers, joining in to take some questions. Mr. Bhargava, thanks very much. Great to have you with us here on the program. Could you tell us what would you say that demand is looking better, right, in the chemicals business, January onwards? Could you tell us what would this mean in terms of growth in top line, growth in earnings? Will the fourth quarter be significantly better than the third quarter?
Well, what we saw in the third quarter was certain weakness or delay in demand coming from infra and non-coal segment in TAN. Acid remained, the demand was stable in Q3. But as you know, Q4, both for TAN and acid, Q4 is the peak quarter as the mining as well as infrastructure demand picks up. So we expect that the weakness that we saw in Q3, we would overcome that from a demand perspective. Acid, like I said, it continues to, because most of our customers are now competing well in the export market. So I think the demand there remains as we saw in Q3 as well.
Sorry, I didn't get that. So you're saying that the weakness that you saw in Q3 in terms of demand, that is now behind you and you're expecting demand to pick up, right, in FY24? If yes, what is the average ballpark growth that you'd be looking at?
Well, it's difficult to put a number to it, but what I would stress on is a couple of fundamental factors. One is that we've debottlenecked our TAN capacity by 45,000 ton in this year. and we are going to do it by another 45,000 next year. So that is going to add to the the top line as well as bottom line. In fertilizer segment, our capacity utilizations were about some 60-65% because the raw material availability was a challenge, and also I think the raw material prices were high. So we are expecting a much better capacity utilization and sales in fertilizer segment. And in acid, I think the demand continues to remain firm coming from nitroaromatic segment. So I think if at all our capacity utilizations are better in FY24, then we are going to see additional volumes and margins kicking in from acid segment.
So can you give us an estimate of what the top line, the addition to the top line could look like because of the debottlenecking of the TAN capacity?
So it's going to add roughly about another 15 to 20%, sales numbers in terms of volumes as far as TAN is concerned. Very difficult to put a number from the point of view that the finished good as well as raw material prices could change from here, either upwards or downwards, and our revenues besides volume are also dependent on what happens to these commodities. So we would rather sort of focus in terms of the volumes, and that's where I said 15-20% increase in volume in TAN segment is possible from here.
Okay, all right. Hi, good morning, Mr. Bhargava. If you could tell us, recently you announced that you'll be buying natural gas from Gujarat State Petroleum Corporation for 3 years, effective from May 1st, 2023. Could you tell us if this, have you locked a rate out here? Will this pricing be, will fluctuate? How much lower will it? I mean, what could be the incremental benefit Deepak Fertilizers gets? And what if international prices or prices fall? Will you get that benefit also?
Yeah, so see, this is about 40% of our requirement, which is our new ammonia plant would start operations from mid-May. Now, this particular price contract with GSPC is linked with Brent prices. So depending on what happens to Brent upside or downside, the price would vary. But the balance 60% of our gas is still to be tied up, and that's where we are significantly relying on the domestic auctions that are going to come up from KG Basin, both ONGC and Reliance. And there, the effect of international prices going up or down would reflect in the prices, ceiling price that government has fixed for HPHT gas. So it's a weighted average of the two, but this particular contract of GSPC is, like I said, is linked with Brent prices.
Okay. Can you tell us what is the debt on the books of the company right now? What's the absolute figure? And will you be adding to your debt since you have a lot of capex lined up as well?
So we have a gross debt of about 3,500 crore, but net debt is somewhere around 1,990 odd crores. We were sitting on almost 1,500 plus crores of cash. So from a net debt perspective, we are fairly in control. Our net worth is almost close to 4,900 odd crores by end of December. So debt equity, if you look at net debt to equity, is less than 0.5%. And yes, we are going to add debt, but as far as ammonia is concerned, we are almost at the fag end of completion. So it's not going to add a substantial debt, only marginal debt. TAN project, Gopalpur project is going to add about 1,500 odd crores of debt. But like I said, it also depends on if we continue to generate the cash that we are, then maybe we'll not draw that entire debt. And from a net debt perspective, post ammonia commissioning, we may even want to start repaying some of the ammonia debt even before TAN debt adds up to our balance sheet.
All right. What is the peak net debt level then we should be looking at, Mr. Bhargava, if you could tell us that? And also, is there any update on the demerger? The last time you all joined us, you all were talking about unlocking some value in a couple of segments, maybe get in a partner as well. Peak debt, and what are the updates on this unlocking value? Go ahead.
Like I said, from current 3,500 crore, largely we are going to add debt in the TAN project, which is about 1,500 odd crores. But if you look at net debt perspective, I think we would probably in foreseeable future, we are not looking to cross 3,500 odd crores. As far as your restructuring or our demerger is concerned,
yes.
We are, I think this is the NCLT process that will go on maybe for another 6 to 8 months before it gets completed. Now, idea of separating these two businesses is also to have renewed focus as we are doing more and more customer focus or differentiation in both these segments, it would allow us. Thus far, we were, even if there were interest from strategic investors, they were not necessarily interested in both these businesses together. Now, separating them would allow us to have, to onboard some of the strategic investors in each of these segments. And in long term, we could even go public and raise, sort of public capital on both these businesses.
Okay, all right. We will let you go on that note. Thanks a lot for stopping by and speaking to CNBC-TV18. So that is Deepak Fertilizers. They have a big debottlenecking plan for their TAN capacity that could add to their revenues. But debt is a bit of a sticky issue. But the stock of the moment right now is Zomato. It's up almost 8%. Mangalam is here to give us a lowdown. Mangalam, lots happening on Twitter with all of those tweets. But you tell us what's the latest here.
Well, indeed, a lot's happening on Twitter. But apart from all of that, there are some shifting sands in the new age companies. For Zomato in particular, they report their third quarter results tomorrow. ICICI Securities expects an overall revenue growth of 6% quarter on quarter and 59% year on year. But this morning, we also had a CLSA note. They have a buy rating with a target price of 70 rupees on the stock, with the company expected to continue its march towards profitability. They expect 5% contribution margin and 2% adjusted EBITDA margin, which implies that they would turn EBITDA profitable. Remember, the previous couple of quarters, they were EBITDA profitable in their core food delivery business itself. And they've said that commentary around addition of cities and contribution of top cities will be extremely crucial. And due to increased focus on profitability, they've lifted their FY23 to FY25 earnings by around 4 to 8%. And that then finally brings to the point on, is it a good time for all the new age companies right now? Primarily because on the one hand, we see all of them talk about increased operational performance. Secondly, there has been a massive correction in valuations. Thirdly, there is tighter funding for competitors because, funds have dried up. At the same time, these companies, because of the virtue of the funds that they raised in the IPO, they have a long runway for growth for themselves. And global interest rates, they are near peak. Everyone was talking about valuations for them falling as global interest rates were rising. But now if the belief is that global interest rates have peaked out, are we looking at some sand shifting for all these new age companies is something that we'll be monitoring.
Okay, all right. Mangalam, thanks a lot for stopping by and giving us that quick take. By the way, from yesterday's low, in fact, the stock is up close to around 12 to 13% odd. So that one's flying away. But let's focus on a couple of other numbers. Astral, well, they posted a weak set of numbers in the past quarter. The profitability was down by close to around 26% in comparison to last year. And margins, they have slipped to around 14.5%. Remember, the management had guided for double-digit volume growth and margins of around 15%. To understand what's going on there, we're currently joined by Mr. Hiranand Savlani, the CFO of the company. Hi, sir. Good morning. Thanks so much for joining in. Well, let's start off with that. Earlier guidance was double-digit volume growth and margins of around 15%. Do you stick by that for FY23 and give us a sense about how FY24 is likely to shape up?
I think whatever guidance we have given, we are much ahead of our guidance. If you see our volume growth of 9 months, we are 20% plus volume growth. And if you see our margin, we are on a 9-month basis, we are at 14.3. But if you remove the inventory effect, we are much higher. And our robust quarter, which is the Q4 in the historically, if you can see, that is yet to come. And we are expecting that quarter will give you a very good margin and the top line growth. So on a full year basis, I am quite confident that we will be able to deliver the higher number than what we have guided.
24? What about FY24, sir?
FY24, I think it's too early. Let we finish this year. Then we will be able to guide you for the FY24. But we will be maintaining 15% plus kind of run rate in FY24 also. And margin will be even better than the current year.
Okay, Mr. Savlani, good morning. Can you help us with how the demand situation is panning out now? Have you seen a recovery compared to what we saw in pre-COVID levels? And both in terms of rural and the urban split, where are you seeing a bigger comeback?
I think demand is picking up very fast. If you see the last quarter number, we have delivered 30% volume growth. So that clearly indicates that the plumbing side demand is picking up very fast. So we are quite confident that now the construction activity has started in a big way. So we are expecting that this demand will continue for 2-3 years minimum. Because normally if you see, when the construction starts, we get the lag effect. We get the piping stage after almost 18 months of the building started construction. So with this leg, the piping company get the benefit. So now I think our turn will come and we'll start getting a good volume in the coming time. So we are very confident that the demand will be good only. And last quarter was the robust. After so many years, we are seeing 30% kind of volume growth in a single quarter. That too also on a higher page.
Okay, so 30% volume growth in a single quarter and demand is very strong, you're saying, especially on the plumbing side. So you have around 500 crores of cash on your books. Since demand is picking up, would you look to expand your capacity in any way or any other use for that cash over the next 1 year?
So I think last 3 years, we were continuously spending money on the capex side. Now the turn has come that we will start getting the benefit of that capex. Today, you see our capacity utilization is just 57%. So we are sitting on a huge capacity right now. So we don't require too much of money for the further capex. On the contrary, we have to see that how best way we can utilize this unutilized capacity and generate more cash flow in the coming time. So we don't need too much of capex further. But on the contrary, you will see a lot of free cash flow in the coming time. And with that, I think all the numbers, financial numbers, whether you pick up the ROC, free cash flow, all will improve in the coming time.
Right. Mr. Salmani, good morning. Could you tell us in the new businesses, I mean, what was the contribution from sanitary ware, faucet ware, etc. in the quarter? And what kind of activities going on there? And how optimistic are you? How is this picking up? Yeah.
So like our first target is not the sales. First, our objective is to create a 500 display center or showroom in the country. And I'm very happy to say that almost 231 showrooms are already up and 80 is under construction. Our target is to complete 500 in the near terms. Okay, so once this 500 display center will be ready, then the automatically sales will start flowing in the system. Last quarter was the first quarter where we started doing the sales and we have achieved the 10 crore rupees of sale, which is very negligible because still sale has not started. It's just only display material is going to the store. So that is the only sale. But we are expecting that Q1 onward next year will start into the sales side. And we have already started bidding into the project side also. And I'm very happy to say that almost 3,800 bathrooms we have already completed in the project and almost 25,000 bathrooms we have bidded. So hopefully we will get some orders from that also. So all these things will be reflected in the number from the next year onward. This year objective is to create 500 such display center and then automatically sale will come. Once somebody is putting money and giving us the space for display, I'm sure they will do hard work and they will do the sale for the brand.
Okay, all right, Mr. Savlani, thanks a lot for joining in. By the way, the market is just flying away now ahead of the RBI policy. The Nifty is at the high point of trade, up 120 points. And in 15 minutes from now, we will know what is on the RBI's mind. On the other side, we'll get our discussion going with a whole host of economists ahead of the RBI policy on what to expect, both in terms of a rate hike as well as what the commentary from the RBI could be. Stay with us.
CNBC-TV18.
Hello and welcome to the CNBC-TV18 studios in the Reserve Bank of India, where in about 15 minutes, the Reserve Bank Governor will make the monetary policy statement. As we have been saying, it's a very divided market with quite a few people expecting a pause and quite a few people expecting a change in stance. At the moment, the change in stance is withdrawal of accommodation. The expectation is that the governor may say, we have withdrawn accommodation enough and now we go into neutral. People will read that as a dovish sign. as we have moved towards the 8th of February, number of people who are expecting a hike have increased. So it's not now very deeply divided. The majority is expecting a hike, but well, a much bigger majority is expecting it to be the last hike. In any case, whether the governor indicates this is the last hike will be something that will be watched. Also important, whatever he says on liquidity and on the currency, if he chooses to say anything. Well, I have with me an elite panel to guide us through what to expect and what we should watch out for in that statement. I have Kaushik Das, the chief economist at Deutsche Bank, Parul Mittal Sinha, she heads financial markets and macro trading at Standard Chartered India, Saugata Bhattacharya, chief economist and vice president at Axis Bank, Abhik Barua, chief economist, HDFC Bank. Gentlemen, and Parul, thank you very much for joining me. Abhik, what would you actually watch out for in what the governor says?
I think I would watch out for I would sort of look at the language very closely, because my sense is that the inflation battle is not over yet. And let me just point to a couple of things. One is that this is the first policy in which the China effect, the positive China effect on global growth and commodities will have to be acknowledged. Number two, although the budget is has gone in for some degree of fiscal consolidation, there is a strong element of demand push in it. Number three, although inflation rates at the headline level have come down, there is really no macro narrative to really convince us that monetary policy has worked to bring it down. It's largely because of certain food categories that it has abated. So given all this, even if they pause this time, I think they have to be very careful about signaling to the market that they are not done and dusted. So I think that is the guidance I would tend to sort of look for and look at the language very closely.
All right, Kaushik, hi, this is Ritu. What are you watching out for? Are you penciling in a 25 basis point hike? Are you expecting any shift in the stance of the policy this time around?
Hi, Ritu. So we are going with a 25 basis points rate hike call. But as per our own assessment, I think this rate hike could have been avoided. But the way RBI has sounded concerned about the core inflation part, we think that RBI will come and deliver a 25 basis points hike, which would take the repo rate to 650. And if you remember that from February 2019, when we had the first rate cut, repo rate was at 650. So we came down to 4, and then we are just going back to 650. So that would seem consistent with the view that we had throughout last year. Only thing is that RBI has front-loaded a lot of rate hikes in last year. We've had 300 basis points rate hike almost in 2022. So if they wanted to avoid this rate hike, it could have been avoided. I'm sure the decision will be not unanimous. There would be dissent, and you'd get a split verdict on the rate hike, but probably the majority will still agree. I would watch out for the new inflation forecast that RBI will give, because October, December, inflation has come 50 basis points lower than RBI's forecast. So what is the forecast they're giving for April, June, and July, September? They've given 5% and 5.4. Whether they bring it down below 5%, our own forecast is below 5%. And then in that context, what is the positive real interest rate that we are going to have with, say, policy rate at 650? So beyond that, whether RBI is signaling whether there is any need for further rate hikes, or will it shift its focus more on tightening liquidity and making sure that rates are on the higher side for a longer time? And also what Lata mentioned, the most important thing is whether you're changing the stance from withdrawal of accommodation to neutral, because neutral, as Lata explained, it's a bit dovish, since it also brings in an element of a possibility of a rate cut at some point of time. So we'll look out for all these.
Okay. Well, at some points in time, Kaushik, you're almost sounding like Dr. Verma, who has also been pitching for an end to the rate hike cycle. But a lot of people are worried that the last two readings of inflation, which came down, was almost entirely because of vegetables. As Abhik pointed out, we have had a lot of milk prices hikes. Cereals haven't gone down, and the Reserve Bank has brought in core inflation into its argument in the last statement. That one is standing at 6%. So over to you, Saugato. What are you going with and what are you wanting to hear?
Thank you, Lata and Ritu. So 25 hike. I think other than all the conditions that you have mentioned, my fellow panelists have mentioned, I think the external environment has also turned in favor of a further tightening. Global conditions have become very, very strong. You've seen conditions in the labor market conditions in the US, in Australia, in Brazil, in Japan, France, you name the country. So economic conditions remain high. Global central banks will continue to hike rates. In India too, conditions remain very, very, demand conditions, aggregate demand conditions are very strong, very resilient economy. The PMI numbers, other numbers, despite some moderation, some signs of moderation, export orders are very strong, order books are very strong. So all of these things, we will see that the capacity utilization numbers will be even higher than that for June in the policy. As all of us have agreed that it's the language that will be because we are on the cusp. 650, our sense is that this is probably the peak. You will get a language, just like the other central banks, that we are going to pause now to assess the impact of all the hikes that we have done so far. My sense is we are not getting into neutral as of now. But my feeling is exactly as you mentioned, that there's going to be some tweak in the removal of accommodation. Maybe that we are in a restrictive territory, but we are not restrictive enough yet. So something like that. But my sense is, as of now, it's not going to be neutral. So they will signal that there is room for hikes, but as of now, we will pause and look for assessing the situation.
Okay. Okay, so as of now, it is 2:1, saying that they may not signal rates have peaked off just yet. Well, Parul, tell us also how the market is positioned. If the RBI were to hike rates and retain the stance at withdrawal of accommodation, do you expect yields to jump up a great deal? Tell us about the market positioning, please.
Right. The market has priced in the 25 basis points hike, and then this to be the terminal rate hikes. And no more rate hikes are priced in. In fact, market is pricing in a couple of rate cuts lower later down the year. So if RBI signals that this rate hike is not terminal, they don't change the stance to neutral, and are hawkish along with keeping the stance unchanged, that's when we can expect marginal increase in rates in the market, maybe a 5 to 7 basis points higher in rates reaction. On the flip side, if they do mention or change the stance to neutral, we expect that to be taken quite positively. In the last 2-3 sessions, we've seen rates harden. OIS rates have gone up by 10 to 15 basis points. We expect material retracement of that move and market to react quite positively.
Okay, we've broadly heard everyone's views on how the market is positioned, whether there will be a hike or a pause and what the stance could be. But Mr. Abik Barua, coming back to you, on liquidity especially, what are you expecting to hear, and any other comments you'd be watching out for? Of course, the split vote of the MPC is one thing.
I think on the liquidity front, they will be careful in their communication. They have indicated, through the last few policies, that liquidity will be adequate. And they have kind of signaled to the market, in maintaining certain liquidity balances in the LAF. They have sort of signaled what this adequacy means. So there is an element of wanting to support growth, wanting to support the government borrowing program built into the monetary policy objective. So given that, I wouldn't expect them to be more explicit in their liquidity stand, but reassure the market that they needn't be concerned about excessive liquidity tightening at this stage.
Okay. Okay. Well, actually, the excess liquidity has come down from the previous statement. As well, the TLTRO will expire in April, right? Or will be redeemed. So, Parul, your thoughts? Will you even look for a smell of OMO or something?
I think it's too early for RBI to comment on OMO purchases. And if we look at the data, they are selling bonds in the secondary market, although in very small quantums. But yes, on liquidity front, we think RBI has tightened liquidity conditions sufficiently. The interbank liquidity is near neutral. The core liquidity remains in surplus of around 2 trillion INR, which is close to the 1% NDTL level, which is still within the neutral bands. So from here, over the year, we expect liquidity to keep getting drained out. Like you said, the LTRO redemptions that happen, RBI may react by either doing OMO purchases or by relaxing or reducing the CRR levels to release back an equivalent quantum of liquidity for the market. But I don't expect any comments on this in this policy.
Okay, so you're not expecting anything on OMOs to be announced by the governor this time around. We just have about a minute to go. So, Mr. Bhattacharya, final thoughts on liquidity as well, and any other things that you would be watching out for?
So liquidity, they don't, I mean, the MPC is not a place for liquidity. I'm sure the LTROs maturing will necessitate a VRR, the variable rate repo auctions that will come in. Nothing on OMOs yet, but my bet is later on in the year, there will be OMO bond purchases. Depending on the liquidity, but as of now, nothing on liquidity and certainly no mention of OMOs.
So certainly no mention of OMOs. Kaushik, we just have a few seconds. So if you could sum up your thoughts as well.
So we think that the next, action would be on liquidity. It will be tighter on the margin so that the, money market rates remain higher than the repo rate so that RBI doesn't need to hike anymore. So if you are at 650 on repo rate, if the liquidity remains tight for a few months, you could have MIBOR at 650 to 675 range, which would do the job for it doesn't require any more rate hikes from RBI. And then as people are saying, depending on how liquidity evolves, whether some OMOs are required at the end of the year or not.
All right, Mr. Saugata Bhattacharya, Mr. Abhik Barua, Parul Mittal and Kaushik Das, all of you, thank you very much for helping us understand what to expect from the governor in the policy, which is set to be announced any moment.